Hey everyone, I'm Voz.
I'm Mark.
And this is
Talking Technicals. How's everybody doing?
Work from home edition.
Work from home edition.
I love it.
She got me to come over
I
here.
did. I got him. So, Mark, the first thing I have to ask you is, what the heck has happened?
Crazy, right?
Yeah, it's really crazy.
It's actually scary too.
It is scary.
It really is.
It is scary. But as you're looking at the market right now, like, what do you see as the pro that you are?
Well, thank you. But going back to what we talked about like 7 months ago when I was on the show. We talked about how we had an expensive market. We talked about how the market's overvalued, and a lot of these companies just continue to go higher. But let's fast forward, right? So we had an expensive market, and we were talking about how all you need is one negative catalyst to bring this market down. No one knows what the negative catalyst was.
Of course not,
Nobody.
because we had so many.
We had so many, that's correct. And in this case, it was the coronavirus, which is a very sad thing, what's happened. And also, all of our 401ks and IRAs are actually taking a big hit too as well, right? Mm-hmm. So it's not just the professional, it's also the investor, and it's also the passive investor really taking it on the chin at the moment.
Yeah, so Mark, everyone out there is going to be really surprised because I was shocked to hear this. Mark is actually looking at long positions in this market, which is something that he never says. He never.
At least the last what? Last year, maybe.
Yeah,
year?
At least you haven't said in the last
14
year,
months,
because it's been an expensive market.
It's been an expensive market, and I was always looking at the 2018 low, where we never really we had the low and we just kind of took off from there. And we can get into it in a chart in a moment. But now, why do I think that it's not as expensive, and why do I think that we're actually trading at a little bit of a discount? Well, I like the way that the market right now has really sold off from 35% off the highs to where we are now, and we are getting that corrective rally. But with the coronavirus, there's a lot of unforeseen things that are happening right now. We have at least 10 million jobs, 10 million in the last 2 weeks. We have unemployment that's going to be reported again on Thursday, and that's going to be probably adding more jobs. But more importantly, we have no idea when the virus is going to end. We have no idea when we're going to have a vaccine, right? And then we have no idea about what the earnings are going to be. That's going to play a massive role in the equity markets moving forward for the next 3 quarters.
And that's coming right up. So we can have some really nice opportunity. Cheap is my favorite price. I don't know about y'all, but
cheap is my favorite price.
Cheap is my favorite price. So I like to take a look at the S&P, to take a look at the general market.
Absolutely.
So why don't we pull up a chart of the ES?
Right. So here we go. We'll start with the ES, and we'll look at in Trading Market Technicals with our mentoring program, we put together a couple of or several industries and sectors where we think are going to benefit from the coronavirus, right? Because you want to be ready, not be afraid to dollar cost average a trade, so you eliminate that timing and you eliminate that picking a bottom type thing.
All right, so what did you do here, Mark? You pulled the Fibonacci.
So what we did was we pulled the Fibonacci from high to low, from the current low, and we also noticed that we have these big volume profiles here to the left, right? And what does that do? That to me, you need to know the sentiment and the psychological part of the market as well. It plays a real big role when you're trading. That's something that really can't be taught. You're going to have to kind of realize and see what happens, but it's real easy to explain. You take that volume profiles and you take the zone. That's where buyers and sellers have actually been battling it out, where the buyers are thinking that we're going to take this market higher, and the sellers are saying we want this market to go short at that area. And you see the very large volume profiles. That's going to play a big role on the way back up from where we are now.
How do you mean, Mark?
We have 3 areas here. I have 2 in the arrows. The 50% Fibonacci retracement at 27.79, and then you're going to have a 29.22, which is a 61.8. Can the market go higher? It could absolutely go higher. Now here coincides nicely with the 50-day moving average of 27.79. We can go as high as 3,000 at the upper end of that volume zone and still be in a bear market. We are in a bear market, guys. Let's not deny that.
Yeah, bear markets, they can have explosive rallies.
They have the largest rallies in bear markets versus being in a bull market. The largest explosive rally, that is correct. And then from here, this is where I think the market's going to have a lot of problem. Because why? If you're long in this area, and if you're long at 27.79 or 28 or 28.50 or 2900, what's going to happen is the buyers that are there, now they just took that ride down, and now they're getting to break even or close to break even. The novice are going to say, I'm out. I can't take the pain anymore. And that's when you're going to get another wave of selling coming in.
Oh, that's going to be a really interesting area to watch.
It will be very interesting. Does it have to happen? Does anything have to happen? What I'm telling you, no. But what we want to do is be prepared and ready to react to price, because that's where we're going to make our money as traders, right? So we want to be ready to go. And
price is what pays us.
Price is king.
Price is king.
Bottom line.
Crown it.
So that's what I'm looking at for down here. Also on the way up on this corrective rally, which is deemed corrective. Look at the volume down below here. Volume is actually lighter than it was on the way up, which should be heavier, right? It should be some sort of convincing saying, hey, buyers are really stepping in. And also I hear about this V-shaped recovery, which is crazy. We're going to have earnings collapse the next 3 quarters. We anticipate at TMT. So in addition to that, right, what's going to happen is you're going to have earnings that are, companies are going to come out and say, well, we know first quarter is going to be dismal. We know that. But it's going to be, what are they going to project in the next 2 or 3 quarters?
That's what people want to watch.
Right. And that's what you want to really kind of look at, what you want to get a good grip of. That's going to create a good buying opportunity. Be patient, because I do think that the market will do one of 3 things. The market will come back in, make a higher low from the previous low where we were at the 2171, 2200. We either test it as a double bottom or we overshoot and break it. My overshoot level is 1800. And 2020, and then 1800.
Really?
That's the overshoot. If it had to get really ugly for 1800, but
anything can happen. Like 20, you just said, anything can happen. Those are the levels that you're tracking.
Absolutely. At 2120, we're at 2020. We're only 100 points away, so it's pretty close.
All right.
So I think it could possibly get there.
Okay, cool. So, well, not cool. I guess we could say, okay, we'll watch out for that.
Right.
Mark, you mentioned that there are some sectors that you're watching.
Yes.
So, okay, we're going to talk Adobe. I'm guessing this is obviously tech is the first thing that you're watching.
That's correct. And we have many of, we don't have enough time.
Sure.
But Adobe being a really, really solid company, we really like Adobe. Where do we like it? Well, obviously down here would have been great, right? I mean, hindsight's
right after that wedge. Look at that.
Great. That bullish falling wedge. Yeah. And look what happened. We just went so straight up. Look at how far away from the 200-day moving average. So that is a great,
especially with that thin volume.
You got a thin zone there,
and look at boom.
And look what happened. So that's a great point, Olivia. So you had that move lower, and now we're in this big pennant formation where we broke down, and now we're breaking back up again. So this is a great opportunity. If you can pick this up anywhere below 290, if it does come back in again, which I do believe at one point, in my technical view, that it absolutely will.
Yeah, we even covered that on Technical Tuesday.
And like I said, it's a great company, and a lot of these tech companies that now have been cut in half, 30, 40, 50% off the highs. Now it's attractive, right?
Yeah, beautiful value.
Right. Now, I'm not saying that we still can't short intraday as day traders too as well, because we short all the time. But to accumulate positions, this is something that we want to take a look at. So tech is one of my sectors.
Okay, great. Let's move on to the next sector.
We're talking travel. Okay. Royal Caribbean, if you like Carnival Cruise, they're really the same. But
I need a cruise right now.
God,
I wouldn't go on one right now, but you're saying down the line you see this as a recovering sector.
Yeah, and it always is, right? If you looked at if our viewers can go back and test every crash or every major incident, whether it be the SARS or the bird flu or any type of market reacting that with negative, you'll see that they all recover. They usually all recover. Good companies, and you got to look for good quality companies.
Okay.
So same thing here, right?
Rocky waters on the way down. It was smooth sailing, and then we hit rocky waters.
We had a lot of chop.
We had a lot of chop.
And a lot of big waves on the way down.
Yeah, we did.
Now look at this. This here, like Adobe, Adobe was up in here, right? Way above that 38%. We're not even down here yet. So what's it doing? It's just kind of chopping around between the 23% Fibonacci retracement and also creating a nice little support area.
What do you think about this heightened volume
heavy volume
around here?
Yep, heavy volume because they're battling it out.
Well, it goes sideways.
Yes, and there's a lot of liquidation. There's a lot of people covering shorts.
Yeah.
So we're going back and forth. And now's not the time to buy. I would like to see this break down below 20 or let's see it rally up a little bit, which it tried to do. You see that here?
Yeah.
And it failed. Now, if it could get anywhere above that 50 area, now I know it's a long way out, but above that 50, look at that thin zone on the way up. I think it's going to be a while before it gets back up here again. But dollar cost averaging a long trade by taking a dollar amount of your portfolio, not all of it, but a little bit of it, and start saying, I'm going to buy 10 shares here or 50 shares. It's just a logical way to do things to really, and then even if you don't hold it, you stand to gain 10, 20 points on something.
And you like to do that, Mark, because we don't know what's going to happen. Just taking a look at these charts, we can go up, down, anywhere.
Absolutely.
Depends on the quarter.
Absolutely.
So that's a great way to take advantage of that.
And another way too is you're not picking a bottom. And you're not picking a top if you're looking to short something. If you're shorting something, you dollar cost average slowly.
Time doesn't have to be of the essence.
That's it.
What a wonderful thing in the stock trading world.
That's it. You see that?
No, really.
That's it.
I can breathe. Okay, what do we have
up
next?
So next is going to be oil.
Great topic, Mark.
Now, we're looking at Sucor Energy, which is an oil company, also has exposure on Canada. And this is just one of many oil stocks I like. And I know we have to be brief, but I will say one thing, that if you are looking to invest in oil for the oil play, I like to look at, you could do the tracking stocks like USO to UCO, which has really gotten clobbered, right? Mm-hmm. Pick a 2-time. I'd rather look at good quality companies that do not carry a lot of debt, and then make sure that they're correlated to oil the way oil moves. That's when you can play oil with these oil companies.
Opposed to like a fund, would you say?
Yeah, and then they have eroding issues, right? They're always eroding. They're always they either have backwardation or they have contango issues, just like futures. So something like this, I like this as a play. And at $10, $12, you can start picking up some shares slowly. And it's not just this company. There are many, many good companies out there that you can take a look at. ExxonMobil.
Sure.
It does carry a lot of debt, but they said today that they're...
debt, didividend,
right.
potato.
Right.
I'll take either.
Exactly. And then again, it's taken a 38% Fibonacci retracement right now. Mm-hmm. So if this were to go up, we have a gap fill area between a 50 and a 61.8. You see, look how nice that comes.
And gaps always get filled.
They always get filled at one point.
We constantly say on this show.
Yes. We don't know the timing. Mm-hmm. It could roll back down first, which we want, and then we want to pick those shares up and then do the gap
get
fill
that momentum to get it through.
Exactly. It's a great trade.
Yeah, honestly.
It's a great trade.
I'll take it. Okay, last but not least, let me guess what this is going to be.
Come on.
Is it going to be a bank?
You got it.
What?
Ah, you're good.
I am good. Well, because I'm watching the banks.
You're good. Banks are reporting next week, as well as earnings season goes into full swing. Mm-hmm. I think that the earnings season for this quarter and next quarter are going to be really, really good buying opportunities. Remember, dollar cost averaging, you want to buy on the way down, not on the way up. So we want to get that opportunity that if Wells Fargo reports, and it's just because of the coronavirus, and then what they're guiding is really going to be the Q, right? Because Q1 we already know is shot.
Mark, I think that you make tons of good points, but I especially like this. You want a dollar cost average on the way down, and I know it sounds really hard. It kind of sounds like it's
like you're catching a falling knife,
exactly.
But you're not. You want to try to. You want to try to. Now, if the trend does change, you make a good point, Olivia. By the way, if the trend changes where you've caught enough shares on the way down, right? Mm-hmm. And now all of a sudden it starts to move on the way up, and you still have a little bit of cash left over that you did not fulfill, it's okay to buy a little bit on the way up, because why? Most of your average dollar cost average is lower.
And that feels so much better.
We're trend traders at TMT, and we always look for that as well.
Yeah, you guys are super trendy.
Yeah, we are.
I'm really digging the pocket square,
like
by the
pocket
way.
Square?
I really like it, and
Thank
I like
you.
that we match, by the way.
Oh, look at this. It's for Easter. Passover, Easter,
And let's see what Wells Fargo has in its Easter basket for us, if there's any treats there.
So here, same thing here. Mm-hmm. We do have consolidation that we're going sideways, right? So there's not really a lot of buyers, a lot of sellers, and I think that's because of anticipation of earnings season for next week.
Okay.
So we're not going to really start laying out some bets, right? We're not going to do that at the moment.
I hear you.
And I think that's the right way of doing it. And even this week, if you're looking to, if you have something that came into your zone, then buy a little bit, right?
Yeah,
but,
of course.
But I wouldn't be buying anything up here where the S&P is right now. I do think that. Look, there's a lot of uncertainty out there, and the markets do not like uncertainty.
We do not like uncertainty.
We don't like it.
It's true. We don't like it. No. But in this case, guys, something again to pay attention to is that while this is it's a freaky situation,
it is.
I feel it. We're all in this together. This is a great opportunity to get awesome value on stocks.
Great companies.
It's coming up.
Yes.
You're watching stuff with the really good quality stocks that you're like, I missed out on that. Now you don't have to. Now you can tell other people that they missed out.
Right. And you know what? There are several sectors that you guys can. It doesn't have to be these stocks. It could be any one of the stocks that you like. Do your homework, right? And make sure these companies are not consumed with a lot of debt where they're either going to have to cut the dividend or go away sometimes, right?
Right.
If they call their loan in, and they have loans out there, right? Because they got to service the debt somehow. So it's just something that I want everybody to do their homework. Is really important.
Do your teachers watching, do your homework.
You have a lot of great companies that are really trading at some discounts.
And speaking of teaching, Mark, you mentioned that you do a mentor room.
Well, we take on regular retail and regular investors that want to trade their 401k, IRA, and we do, and professional traders too as well, where we take their system and we tweak it. And we look at it and say, and maybe the trader might be doing something wrong. Look, we all do things wrong. Nobody's perfect. But from an outside view, from doing this for 28 years, I can take a trading plan and then dissect it and then actually help that individual, that he or she trader, to actually get back to profitability.
Oh, that's great.
And then we also have a lot of great opportunity as far as trade ideas of what we think is bullish, what we think is bearish, and then the trader would obviously ultimately take their step and buying and selling it themselves. But we would look at their trades too as well. If they did something great, hey, this is a great trade, or this is why you did something wrong. You know, it's a great. I remember when I was doing it, I was being mentored. It was the most invaluable thing I ever encountered.
Well, I love having you as a mentor, Mark, and we're really appreciative that you took the time to come on the show.
My pleasure.
It's the best time to have you here.
My pleasure, and it's also great that you invited me again.
You're always invited.
I always love doing the show. I think it's a lot of fun, and you guys are great out there too as well. I get a lot of comments, and we really love doing the show, and we also enjoy the fact that you're gaining knowledge, and you guys are enjoying the charts.
Knowledge as well.
That's it.
And in the meantime, stay healthy, and thank you for tuning in.
Stay safe, and we'll see you soon, very soon.
Bye.
Take care.